Alrighty, guys, what's happening? Welcome back to another episode of Sensible Investing, the deepest stock market research channel on YouTube. My name is Jesse, and today we're going to be talking about an outlandish investment idea. And now I know that it's been a couple of weeks since I last posted. It's been absolutely hectic on my end. I've been researching so much, deep in the weeds. I've been buying stocks, selling stocks, buying stocks, rebalancing my portfolio. So look, it's been absolutely crazy, but we've got a good video in store for us today. And also next week, I plan to upload a video of some of the buys and sells that I've been making in January and much more in February. All right, guys. So look, let's get into it. Now, this video, this was from back in January when I drew the stock, which a lot of you have suggested for the stock picking event, and as a result, the stock that was drawn and won it was Union Medical Health, which was a stock suggested by Oscar. Now, this stock, it's quite interesting because it's a cosmetic discretionary, I guess you can call it discretionary healthcare stock. However, it is a specialist company in Hong Kong and China, and I thought it'd be quite interesting to give you guys some more insight into, I guess, why I think this would be a good industry to look at. It's very niche, it's very outlandish, but it is most certainly a good industry, and it's an industry with a lot of potential. And the reason being is because, you know, it's not very similar to Western cosmetic surgery, right? Because if you speak with, you know, I'm sure many people that you know, especially women, and you ask them, oh, have you had cosmetic surgery? And I suspect the majority of them will say they either haven't or have not considered it, right? But this is it's quite the inverse if you go to somewhere like, you know, China or Hong Kong or South Korea. Especially South Korea, because you've got the rise in pop culture, you know, you've got the likes of BTS and K-pop and all these crazy beauty standards. And so what that's actually led to is you've got these very obscure, niche, and outlandish type surgical procedures. You know, for example, I don't even know how to pronounce this word, but it's whereby if you're born with a single eyelid, kind of like me, and you don't have the second eyelid, you know, in Asian culture, that's considered ugly, and beautiful people have, you know, two eyelids. So then that's one of the most common surgeries is to get that, you know, sounds absolutely ridiculous, right? But there are lots of these surgeries, and the standard of beauty is absolutely obscene. Okay, guys. So when you get a chance, I really would encourage you to read this blog and some others. You know, do a bit of a search, do some research yourself, and you can actually see why I'm quite bullish about the industry, because there are so many different procedures, and the standard of beauty is so whack that allows people that specialize in this area to create many different revenue lines. You know, whereby it's to trim that back a bit, or, you know, it's not just like in the West where you got Botox and fatter lips and that's about it, right? And some fake tits, yeah? So it's really different, right? And so I think that this industry has a lot of potential. So on the back of that, now what I wanted to take you through is something they call beauty tourism, right? So cosmetic surgery tourism. So because as you guys know, right, you've got, you know, cosmetic tourism, beauty tourism, right? There's all sorts of tourism. And the reason being is because you've got the rise in middle class incomes and the rise of the middle class. And as a result, people are now, you know, being more selfish, or I wouldn't call it selfish, but, you know, they are spending more on these very seemingly trivial things. And the majority of people spending are actually people my age, your age, you know, if you're sort of a millennial or younger, who will be the future high earners of the industry. So definitely lots of potential, especially in Asia. Now, in terms of the stats, I'm not too sure if these stats are accurate, but I think it's probably closer to about 30 or 40 million who live in China as of today, 2020. Perhaps they're a little bit outdated, but who've, you know, had plastic surgery. And in terms of the people who are considering it or have considered it or know someone that has done it, you know, that's even wider, right? So the network reaches far and wide, and this is due to the likes of rising incomes, obscene beauty standards, the rise of social media, peer pressure, etc., etc., etc. Now, you can almost say in the likes of Asia, especially in China and Korea, this is, if it hasn't already become a way of life, it is most definitely becoming a way of life, right? Now, very, very interesting, all right, guys? And like I said, when you have some time, if you are interested in this industry, I'd encourage you to do just a bit more deep research in terms of the the different types of procedures, what they do in Korea, how this influence came about, where it's going, and etc. Now, the reason why I think there's a place for the likes of Union Medical Health is because, yes, you can say, look, this whole cosmetic surgery, it's glamorous, we're going to make you look to perfection, right? Flawless. But then there's also a very, very dark side, right? Where because there are a lot of surgeries happening which are outside the medical system or unregulated or uncertified, there's been a lot of surgical mishaps, right? Which has led to people, looking a lot worse off than they did before, going in like a hobbit and coming out looking like Smeagol, okay? So as a result, this has created, I guess you can say there's a bit of a black market, which is, cheaper, more affordable, right? Because not everyone can afford these, and then you've got sort of the upscale market where it's more legit. And as a result, what I think it's created is an opportunity for the likes of a Union Medical Health to come along and offer a one-stop shop for anything discretionary, cosmetic, medical related, right? So we're not just talking about surgeries, but it might be some insane procedure like, skin whitening, which again is massive in somewhere like Asia, China, Thailand, Vietnam, Korea, everywhere in Asia, right? It's like they've got something against tan skin or dark skin. They absolutely hate it, right? And they can't stand it. So, if you walk through the shops of somewhere like Thailand, everything has skin whitening cream in terms of, your moisturizers, your hand cream, whatever, right, guys? So what Union Medical Health has come along and their value proposition and their use case is saying, look, we will provide you a one-stop shop where you can get all of this done. All of our doctors are registered, they're qualified, you can trace them, it's not black market, we have indemnity insurance, yada, 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 right? So it's a very good value proposition because it opens the door. Yes, it might be a bit more pricey, but you're guaranteed quality, outcomes, and safety, right? It's a very, very interesting company. I think it's a cool business model. Now, the reason why I think they've also got a lot of things going for them is because if you look at where they're located, right, which obviously is not very good because of the whole coronavirus situation, but when this all blows over, you'll see that they're in a very good position to capitalize because you've got Beijing, Shanghai, Chongqing, and southern China, which is where all of the money is, right? And obviously Hong Kong, which is the luxury capital of Asia, pretty much. And I guess you can even say the world because, it's all about luxury, right? This is where people have a lot of money, right? They're middle class, upper middle class, high earning, high disposable income. It's a very good network. And if you actually dig deeper in terms of the numbers of people flying from, the mainland to Hong Kong and back, again, not very good because of the whole coronavirus clampdown, but you'll see that the numbers of people coming in and out and in and out, just for short stays, going up, 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 and up, right? And so this is a very good tailwind that Union Medical Health has going for them. And you can actually see it's reflected in their numbers, right? Like this linear revenue growth and linear earnings growth, very rarely do you see companies do this, okay? Fantastic gross margins, okay? Good operating margins, good net profit margins. Margins are going up, earnings are going up, revenues are going up, everything is going up, 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 and up in a straight line, okay? And as you can see, 2138, that's the ticker symbol. They don't trade under the US stock exchange, unfortunately, so I can't even invest in them if I want to because my broker can't trade Hong Kong. But nevertheless, 2138 is the ticker symbol. And so what you guys can see is, you've got very strong numbers, very strong trends, very strong tailwinds. But then you look at the share price and you go, wait, what? It's like at 1 year lows and it's paying a nice dividend and for all you value investors, I'm sure you guys will love it because they're paying a very solid dividend. It's increasing and the PE ratio is like 13, right? And it's growing at 20% or whatever it is. So you guys would absolutely love it. Now, whenever I see something like this, and I'm going, okay, so everything's going up. You got a healthy dividend. They're increasing dividends. But why is it going down? Okay, there's two reasons that this is happening, right? The market could have lost its mind, which it does often, or perhaps there's something a little bit deeper. And so what I've done is I've decided to do a much deeper dive into Union Medical Health. And the very first thing that I look at when I look at any stocks, right? Any stocks, doesn't matter, big, small, whatever, it's the acid test. It's the consistency test. This is absolutely crucial because if a stock does not pass the acid test or the consistency test, then it's an instant pass for me. And unfortunately, in this instance, Union Medical Health is a massive pass, which is a shame because, I think it's a great industry and, it definitely has potential. So the reason why Union Medical Health was an easy pass for me, even though it took me about 30 hours to find out why, is, look, the leading indicators do not stack up, okay, guys? And remember when I said in a previous video, it's all about the consistency of management. If management are inconsistent, then you know something is up, okay, guys? And take a look at all of the orange boxes, okay? All of the orange boxes highlighted are their key metrics, okay, guys? And I really want us to focus on these key metrics because we have to remember, if a company has been disclosing and harping onto the market about, this key metric, that key metric, why would they suddenly stop reporting it? What are they trying to hide, okay? For example, average spend per key client. This is very, very important information. And in their reports and calls, they're like, oh, they keep on harping on about it. But then, boom, they've suddenly removed it. And then, all of a sudden, they just stopped reporting it altogether. Not very good, guys, okay? Next second, okay, we've got, people who have received at least one service or at least one product or service. Again, they stopped disclosing it. Big red flag for me, okay? And then finally, they've stopped disclosing the number of medical complaints that have been filed with the HKCC, which is, protection of consumers, okay? And if we think back before to the beginning of the video, those dodgy surgeries, right? Now you guys can say, well, look, maybe they just didn't report because of X and Y reason. Well, actually, no, because I don't actually think the numbers stack up. Let me take you through why. So let's look at a few reasons, okay? Okay, let's go on to the next slide. Now, as you can see, this is just me putting together, trying to track consistency, okay? Very important, and management have been inconsistent. And I think they're actually trying to hide some numbers that don't stack up, okay? Let's move on to the next slide, okay? Now, this is part of another report that they've had. And the minute I look at this, okay, you've got all these weird formatting, and then this weird text, and then these weird colors, and then you can't even read that. Now, you can say, okay, sure, it was human error, but look, let's compare this with a proper legit company, okay? Would Facebook do this? Would Apple do this, Would American Airlines do this? So this really just screams a shady sort of reverse merger, dodgy Chinese stock that can't get listed on the US exchanges, and that's why they list on the Hong Kong exchanges, okay? Now, that might not be the case, but I'm just thinking, look, if we're trying to invest in a legit company and they've got all these errors, I'm going, why would, and this is their annual report, right? This is what they go to investors and tell everybody how great their business is. Surely somebody would have raised the question, like what's going on here, guys? You know what I'm saying? So, yeah. So look, consistency, and then obviously, this is not just happening on one page. Yeah, it's happening throughout the report. So, if they're genuinely paying their sort of I guess their PR people, maybe they hired a bad PR person, but it's happened in more than one case. Again, that's a form of consistency, but it's consistently incompetent, which is, again, not a good, I guess, it's not giving me confidence to want to buy the stock, okay? Secondly, the numbers don't add up, okay, guys? Because if we have a look at it and their definition of key clients, yeah? A key client is a client who has, in the relevant financial year, contributed at least 5,000 Hong Kong dollars to our revenue for the services provided and visited our service centers and clinics at least 4 times, okay, guys? So $5,000 of revenue, visited it 4 times. But you can see, well, hang on, why do they, okay, so we go back. Why do they stop disclosing the average spend per key client? And I think the reason is because the numbers don't add up, okay, guys? So now if we look at these numbers here, the one highlighted in teal, aquamarine, green, and beige, okay, guys? Now, if we take the number that we do have back in 2018, which is the number of key clients they have, and then multiply it by the average spend of 51,000, then we come to the number of 1.96 billion Hong Kong dollars, right? Now, let's deduct 1.96 billion Hong Kong dollars, as you can see here where my mouse is, right, from their total revenue for the year, which is 1.836 billion Hong Kong dollars. We are left over with 740 million Hong Kong dollars. Now, if we deduct their number of key clients from their total number of individual customers, okay, guys, we have then left over 78,024 customers by deducting 21,500. Therefore, if we divide $740 million by 78,024 customers, we have an average spend of 9,488. But hang on a second, didn't they say a customer in the relevant financial year who contributed at least 5,000 Hong Kong dollars to the revenue as a key customer? So shouldn't all their customers be key customers? I mean, what's going on here? I don't understand, right? And so there is a lot of confusion. In addition to the fact that they've gone and, you know, hidden the number who have received at least one service more than once, okay? They've done it in 2017, they've done it again in 2018, and then they've done it again in 2019, and they've completely withheld, you know, customers who bought at least one service. I mean, okay, guys, look, this is very dodgy, okay? And also they keep harping on about PRC customers as a percentage of revenue, and yet they go boom, 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 bang, and then they stop disclosing it altogether in 2019. Again, the leading indicators don't add up, okay, guys? So look, this is why it's an easy pass for me for Union Medical Health, because if it seems too good to be true, it probably is. Okay, guys, and if you think back to my previous video, you'll realize why I keep saying leading indicators are very important, okay? Unfortunately, I cannot read Mandarin. Yes, you can say you can Google Translate stuff, but what about what their customers are saying, okay? Because they can regulate Facebook comments, right? But they can't regulate Weibo comments, or at least I don't think they can. Maybe they can, I don't know. But I don't have access to Weibo, I don't have access to WeChat. I'm not familiar with the Hong Kong consumer protection system. I don't know sort of what Hong Kong websites consumers can go on and rate their service, you know. So there are a lot of leading indicators missing, okay, guys? Now, Oscar, I'm sorry that, you know, I wasn't able to give you a good analysis of the stock, because I know that you're very bullish on it and that you have a position. But I think it's very important when we look at stocks to look beyond the numbers, and not just look at how cheap and good it is and get excited, but really look at the reason why it's cheap and whether we can actually get any visibility. And I think that if we can't get any visibility, then, you know, it's a pass, right? So look, guys, that's the end of the video. I hope you enjoyed it, and you know, if it was a bit anticlimactic, I am sorry, but like I said, my job is to do the deepest research I can to bring you insightful investment ideas that'll help your returns you know, improve, right? So guys, if you enjoyed the video, make sure to hit the like button, subscribe, leave a comment. Really appreciate it. I really appreciate it. It helps the channel grow. And then next week we'll have some fun and we'll have a look at some of the stocks that I bought and sold, how much I made, how much I lost, etc., etc. All right, guys. Until next time, happy investing. Have a great weekend.